Naren, I want to put it in the context of the current economic condition that we're in. And you're absolutely right. Normally we were used to inflation, normal increased cost of doing business. And if you're in business, you expect your costs to go up a little bit every year. That's part of the reality of being in business. However, what's happened, in the post COVID-19 world is those costs have gone up, not incrementally, but they've gone up geometrically. They've gone up geometrically. So when we were used to, cost of living increases, COLA, cost of living adjustments, COLA, we normally figured that in dentistry, just like any other business, your costs are going to go up a little bit more. Now they're going up geometrically. They're rising well beyond our ability to keep them under control, especially wages, especially team member wages. Those have absolutely there's always been a balance between supply and demand of quality team members in dentistry, supply and demand. And in most years, there was always a little bit more supply. In other words, we could put out an ad, whether it be an Indeed ad or go to dentalpost.net or wherever you might, post your ad. You'd put an ad out and you'd get a handful of qualified respondents, and sometimes quite a few qualified respondents. And today what's happening is that the demand for those jobs is increasing the supply of those jobs. And so now, even in my coaching client base, we find it more difficult to fill open positions. There's just nobody applying. As a result of that, Naren, what happens to wages in any kind of climate like that? When there's more demand than there is supply, think about it in housing for just a minute. Naren, let's say you're a developer of a housing development in Toronto, and you built this beautiful development. Let's say you've got 100 houses you're selling, but it turns out there's way more demand from those 100 houses than you expected. What happens to the price of those houses?
Yeah, it actually happened in Toronto. I mean, literally a house today is worth twice as much as a house 6 years ago. So wages have, like in this case, it's the opposite example. People don't have double the money, but the price of the house is double. So the same thing with dentistry, right? Let's say you are $1 million practice in 2019, and let's say you didn't grow 10% every year like Gary is teaching, but perhaps you stayed at $1 million, pretty healthy in most times. Maybe you grew 2%, 3%, like small increases. But your expenses have gone up 10%, 15% every year for the last 4 years. So now all of a sudden, you're spending 50% or 30% or 40% more than you spent in 2019. But your revenue is not up 40%, even though your expenses are up 40%.
Well, and that's simply, and the main culprit there is the PPO practice model. In fact, to add insult to injury, your income from the PPO plans has likely gone down.
Right.
They've likely cut your fees. That's happened across the board for many PPO plans. So it's really, you're getting clobbered on both ends. Your costs are going up radically, but your income is going down. Now, if you're not a fee-for-service practice, one of the ways any business could do this, but when your costs go up, what do businesses do to counteract their increased costs? They raise their prices. In dentistry, they would raise their fees. Now, of course, ultimately, there is the marketplace will determine, what you can charge. But if any of our listeners have gone out to eat during the year 2023, you would have to have been completely oblivious to the fact that menu prices are significantly higher, significantly higher.
Menu prices are higher, tips are higher. Like now automatically, even when you buy coffee, there's a 15% tip. Like today a coffee costs 50% more than a coffee did in 2019. You can name that for pretty much hotels. I mean, hotels used to be $150. The same hotel today is $300.